In the last 3 months, merger and acquisition activity has picked up in the property sector, with possible listings also on the rise. Now, to talk about the listed property space and key stock picks, we are joined in studio by Kundayi Munzara, Director at Sesfikile Capital. Kundayi, thanks very much for your time.
Thanks.
Talking about this merger and acquisition activity, is it just that the big players are gobbling up all the smaller players? We've had a number of new listings coming to the fore, and do you think that trend is set to continue?
It's actually quite interesting. I think it's everything that we're seeing now, as in all of those things. So I think 2 weeks ago, when my colleague Evan Jankelowitz was on the show, he spoke about Capital potentially making an offer for SA Corporate, which is a big player with another big player. So there's an example of that. Another one that we've heard about is Redefine and Fountainhead, where Redefine has acquired Fountainhead's Manco. That deal is still on the cards. I think it's a few months away.
It says that's a make or break for Redefine. You back Redefine if the deal goes through, and you walk away if the deal doesn't go through. Is that a fair assessment on Redefine Fountainhead?
Absolutely. I think what's happened really, it's more a pricing thing. I think Redefine has re-rated significantly since that announcement or news of that happening. And what's happened now is that it's priced in all of that potential. So if that deal doesn't happen, I would expect that share price to revert.
Kundayi, overall, how big is the market now? What is the market cap of the property sector? Because, you know, some time ago, one of the limitations to listed property was really that it was fairly illiquid. Has that improved meaningfully? Is it a sector that you can trade more easily in nowadays, or is it still fairly restricted?
I mean, the sector is now around 150 billion rand market cap, which is a very big jump from maybe 3 years ago because of all of the new listings that have happened. But the liquidity issue is still a bit of an issue. Things have changed in terms of the amount of stocks we can invest in as fund managers, but the liquidity still is an issue. There's a real discrepancy between the large cap stocks and the smaller ones that have listed.
Do we find foreigners participating in the listed property space? Obviously, when we look at the general equity market, foreigners participate quite actively, and in some of the stocks would hold a very significant percentage. What is it like within listed property? Do you find foreign ownership?
It's very small. I mean, the foreign ownership now in South Africa is probably around 4%. But, you know, having said that, they're the likes of Hyprop, Growthpoint, and the big ones, where that foreign ownership has doubled in the last 2 years. So for a lot of the foreigners, if you're looking at, let's say, $100 million fund, so to speak, they'll only really look at the big ones, like the big names, the top 4 stocks. They won't buy across the board.
Kundayi, if you are for the first time looking at the listed property sector, where do you start? What would you do? Do you go for the large companies in this space? Do you follow gurus like yourself and Kilan Ndlovu from Stan Lib, Evan Jankelowitz? Is that where you start? How do you start into the listed property space?
I think it's probably a general answer. I mean, where you would start is get yourself informed on what you're actually looking for from the sector. So if you're looking for, very exciting returns of 20% plus per annum, you're probably in the wrong space. I think it's a conservative asset class that should sit between bonds and equities. So first, get yourself educated, and then look at the top fund managers in the sector. I think it's always best to give it to the guys who spend all day looking at the stocks
and visiting the shopping centres on the ground, etc.
Which is what we do at Sesfikile.
Can I just come back to something you said earlier on? You're saying that it should theoretically fit between bonds and equities in terms of performance. Yet listed property is the best performing asset class in South Africa since 1994. So that's a huge chunk of time, right? And the performance continues. The performance has been superb in the last while.
Why is nobody taking notice of it?
Well, I think some people are clearly, they're benefiting, but maybe the broadening.
Why is the broader market not taking notice?
Do you think that it's an underrated sector in South Africa in terms of fund manager ownership, or is that just purely a limitation in terms of the size of the market?
It's a few things, but generally I think the pension fund industry has underinvested in listed property over the last 10 years. I think if you look at what percentage property makes listed property, it's probably around 3 to 5%. And a lot of fund managers used to lump property with bonds. So a bond, a fixed income investor, would be a property fund manager as well. That has changed over the last, let's say, 2 or 3 years, where there's a lot more focus on the sector. There's still, I think, underrepresentation, I think, if you look at it, but and hence there will be more opportunities, I think, for the next couple of years. It's still a distant cousin asset class, basically.
Can the performance continue? What is the valuation like of listed property at the moment? Would you be, I mean, it's an unfair question, but would you be advising people to continue to buy? Is the valuation attractive, or is it fully priced?
I don't think it's fully priced. I think it's fair value, not attractive at this point. Listed property on a forward yield is giving you 7.9 rolling 12-month yield. The bonds, if you look in the 10-year space, you're probably getting about 7.7, 7.8, depending exactly when you look, of course. I think listed property, or the property sector, the bricks and mortar, is coming out of a bit of a lull in performance. So we expect a much better outlook for, over the next 3 years relative to the last 3 years for listed property. And as a result of that, I think people can invest. But the question should also be, what are you expecting?
And isn't it about the stock picking as well?
Absolutely, yeah.
You've got to be very specific. I mean, there are some hot stocks that you've got, and you're going to throw forward to it. For us, for our audience, what are those hot stocks?
There are a couple. I mean, there are different opportunities. I think what's looking quite attractive now. I think Rebosis is looking quite attractive. It's a fairly new listing. Yeah, it's about a year old. It listed last year, May. They've got quite a strong, an attractive forward yield. The underlying leases are, 40% government, 60% large regional shopping centers. The management team is very competent, and they've got a very long development pipeline. So, and if you look at that and where it's trading relative to the sector, I think it's probably at about 8.6, 8.7 yield, versus the sector at 7.9, with better distribution and growth prospects for the next couple of years. So you're almost being paid to wait for any potential in that pipeline. So I think it's attractive.
If you break down your current portfolio between the key areas, being retail, industrial, and office space,
yeah,
what are you tending to favor at the moment in the composition? Obviously, some of the big companies are involved in all three sectors,
yeah,
but what would be your tendency or your favorite area to be involved in?
We still like the dominant retail in the outlying areas. By outlying areas, I mean in the towns like in Polokwane and those sort of areas. Resilient, I would say, is probably a hot stock. It's probably pricey today, but I would say that's a hot pick as well. That's the one with that exposure. We don't really like the suburban retail. I think there's a lot of cannibalization. If you look in the north of Joburg and how many shopping centers are around any 5K driving radius, I think the competition is just too much for these.
Is it overtraded?
I think for the small centers it's overtraded. I would say north of Joburg is probably overtraded.